Hey everyone, welcome to the complete guide to owning real estate in Thailand. We're going to go through all the aspects of owning a property from buying, maintaining, renting out to selling your condo or house. So this is going to be a long and comprehensive video, and that's why I've included timestamps for you to reference and skip around if you need to. And I've sprinkled some jokes throughout the video to keep you awake as well. And yes, I am reading off a teleprompter because, hey, I'm a mortal human and there's no way in hell I can remember all this. Also, check out the description of this video for extra information and links. And ultimately, I really hope that this video will serve as a valuable resource for you to start your journey into finding your dream home in this wonderful country that is Thailand. So let's dive right into it. Alright, so the first topic we need to knock out of the ballpark is the various ways that foreigners can own property in Thailand. And the three most common forms of ownership by foreigners are freehold, leasehold, and through a Thai company. So I'll explain these one by one. A freehold means that a property can be owned outright in your name forever. Done. Para siempre, khop kun krap. Forever. This applies to units in a condominium that are designated in the foreign quota, which will never exceed 49% of all units in the condo. So for example, a project that has 100 units for sale will allow 49 units to be owned outright by non-Thai nationals in their name under the freehold or foreign quota. And then the remaining 51 units are reserved for Thai nationals in what is commonly referred to as the Thai quota. Wow, how did you guess that? Now, it is entirely possible for the Thai quota to exceed 51%, but the Condominium Act states that the foreign quota can never exceed 49%. And by the way, it's not uncommon for foreign quota units to be selling at a premium compared to the Thai quota units, depending on demand. Next, we're going to talk about leasehold ownership. Now, in some of the holiday destination markets in Thailand, it is common for the foreign quota to be totally filled. And due to this high demand, developers will offer the rights to units outside of the foreign quota on a leasehold basis. And leasehold means that the building or land is held on a lease from the Thai owner. And the longest registered lease permitted by Thai law is 30 years, which will be registered at the land department. Now, it is common for developers to offer an additional 2 terms of 30 years totaling 90 years. Now, understandably, a lot of people may be wary of a leasehold, so some questions to ask when looking at a leasehold property. Number 1, who is the lessor? Because securing a lease from a Thai company offers much more security than from a private individual. Number 2, do I have voting rights as a lessee? Because some lease contracts do not allow the lessee to have voting rights. Number 3, is there a succession clause in the lease agreement that will allow inheritance of the lease? Number 4, to be or not to be. Number 5, who is John Galt? Number 6, do you like green eggs and ham? Be sure to consult with your legal representative or spiritual leader regarding these very important questions. When it comes to villas and houses, also known as landed property, a foreigner can own these properties through either a leasehold, as I mentioned just now, or through a Thai company. Now, there are strict rules in setting up and maintaining a Thai company when foreign nationals are involved. In summary, which ownership structure primarily depends on the type of property you are interested in purchasing, whether it's a condo or a landed house. Once you've found a place you'd like to purchase, the first step is to ensure that all parties understand and agree on the major terms and conditions of the transaction. This is when the notions of mai pen rai and sabai sabai need to go out the window. Major terms are such as the purchase price, obviously, and if you're purchasing a place from the secondary market, there will be a lot of room to negotiate with the owner. But when it comes to an off-plan place from a developer, generally there is little to no flexibility on the price, although some developers may be slightly flexible on payment plans, or they may include or discount a furniture package. Other things to agree on are the reservation deposit value, whether the buyer conducts due diligence, and if so, whether the reservation deposit is refundable, what is included in the purchase price, such as furniture or fittings, what fees the buyer is responsible for, and what fees the seller is responsible for, and what will be the completion date for the transfer of ownership. So once you've agreed on all these terms, they'll then be put into writing in the form of a reservation agreement. This document outlines the general purchase terms, conditions, and timeline associated with the pending purchase. Once all of those terms have been inked and signed, you then put in your reservation deposit, which is usually 5 to 10% of the purchase price if you're purchasing a secondary unit from a private owner, or around 2% if you're purchasing directly from a developer. Now, this will secure the property and remove it from the open market. It is common practice for this deposit to be held either by the broker, lawyer, or seller, not by your Thai girlfriend you just met. At this point, let's talk about transferring funds into Thailand. Now, the process of bringing money into Thailand is pretty straightforward. As long as you have the right documentation, you can easily transfer in without any problems. When you do the transfer, you'll need to provide proof of inbound transfer from your issuing bank, noting the specific purpose of the transfer. For example, you indicate it's for a property purchase, you put in the building name, unit number, and location, etc., etc. And then you will receive what's called a foreign exchange transfer form from the bank as a supporting document. Now, the foreign exchange transfer form, or FET in short, is the official form required to transfer over 20,000 US dollars into Thailand in any currency in order to purchase a property. The proper issuing of this document is required in the future event of selling the property, as it will facilitate you transferring funds out of Thailand. For all other payment methods, you will be required to obtain a payment slip to be used as a supporting documentation when you eventually transfer money back to your home country. So if you transfer over $20,000 into the seller's bank, they can get the FET form for you. If it's under 20,000 US dollars, the seller will get a payment slip from the bank instead of the FET form. Now, if you transfer over 20,000 US dollars into your bank account in Thailand and then to the seller, you will need to get the FET form from your Thai bank. Now, for all other methods of payment, you will be required to get a payment slip from the bank you use as a supporting document instead of the FET form. Next is the sales and purchase agreement. Now, typically you will have 30 days to review the terms and conditions of the sales and purchase agreement, which will contractually outline the conditions of sale. During this period, buyers have the option to appoint an attorney in order to conduct a legal due diligence. It is common practice for property buyers to consult the professional expertise and services of local lawyers to conduct due diligence checks on the property and the seller to ensure that there are no outstanding charges, shenanigans, or pending court cases, and that they have the legal right to sell. Also note that buyers are not required to be in Thailand for the legal transfer of the property at completion. A power of attorney will allow a lawyer or representative to conduct this on your behalf, and any funds used to purchase a property can be sent to your legal representative, who will then ensure all legal documents are made to the seller and the title deeds and ownership documents are returned to you. Next is settlement and transfer. So we'll talk about the process when purchasing from a private seller first, then we'll talk about purchasing from a developer. If you're purchasing from a private seller, both parties will set a transfer date at the government land department. Now, the buyer will prepare the rest of the funds that they owe, and then the seller will present the original ownership documents. It is common to appoint a representative through a power of attorney to execute the transfer. When the ownership is now transferred, the buyer will be in possession of the keys and the ownership documents, and the new owner's name and details will be registered with the Provincial Electricity Authority and the Building or Projects Juristic Department for the next billing cycle of the maintenance and electricity fees. Congrats! You have successfully purchased a property from another private seller. Now, if you're purchasing from a developer, there will be a first contract payment, and this payment can range anywhere between 20 to 40% of the purchase price. For non-residents of Thailand, the funds must be transferred into the country from an overseas bank account. Then, after the first contract payment, depending on where the project is in the build cycle, your next payment will be linked to milestones in the construction progress. Again, payment must come from overseas. Then, 2 to 3 weeks prior to handover, what's called a snag list will be created to correct any defects in the property prior to handover. And when the build is finished, you'll pay the rest of the purchase amount and your property is yours. You are not required to be in Thailand to complete this handover process. This can be executed by a third party on your behalf. Whew! So that was the process of buying a property in Thailand. And of course, you can choose to embark on this Herculean journey equivalent to trekking to Mordor all by yourself, or you can choose to use your get out of jail free card and seek the assistance from a local real estate agent like one from Fazwaz, who's done this countless of times. In Thailand, the agency fee, also known as the brokerage commission, is paid by the seller, not the buyer. These fees typically range from 3 to 5% of the selling price, depending on which market the property is located in Thailand. To reconfirm, there are 0 buyer fees charged by real estate agents operating Thailand. So, as the buyer, you may as well make life easier for you and reach out to an agent. In fact, if you're a seller, you should probably consider using an agent as well so you can just get on with your life. There's a saying among misogynistic rich people that if it flies, floats, or rented, don't buy it because you'll drown in the maintenance cost. And thankfully, your home does neither of these things. And if it does, you're probably Christopher Walken. So let's look at the costs associated with maintaining a property in Thailand. Maintenance fees, known as common area maintenance or CAM fees, do vary by property. The maintenance fees are typically paid monthly, but sometimes requested a year in advance. They cover the general upkeep and repair of common areas such as the pool, gym, reception area, gardens, elevators, security staff, blah, 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 blah. These typically range from 40 to 70 Thai baht per square meter, although they can go higher for bigger projects with a wider and more luxurious selection of facilities or required upkeep. The maintenance fee typically does not cover cleaning or major repairs inside your actual property. In some cases, it does cover basic repairs, but you will need to check with the management company and the agreement. Next is the sinking fund. The sinking fund, not to be confused with your sinking crypto portfolio, is a common fund paid by owners of all new condos or villa properties. It is a fund reserved for the repairs, repainting, structural fixes, and equipment replaces. Normally, a sinking fund is calculated on the price per square meter multiplied by the living area of your property. It is paid just once upfront, although in rare cases it will need to be replenished after a number of years upon agreement of all involved parties. The sinking fund is a totally separate fee to maintenance fees. It is only payable on new residential properties and is not required on any existing or completed properties. The juristic department should be transparent in providing evidence of allocation of sinking funds, and it is common for owners with voting rights in a project to collectively vote to determine where the funds should be spent. This contribution to the sinking fund tends to be around 400 to 800 Thai baht per square meter. Next, we move on to renting your property. First of all, are short-term rentals allowed? A straightforward answer is that the Thai law does not allow owners of condominium units to rent for durations under 30 days unless they have a hotel license. Now, that being said, data released in June of 2019 reports that the Airbnb economy generated in excess of 33.9 billion baht in estimated direct economic value for Thailand in 2018. Basically, the reality is in direct contradiction to what I just said. Welcome to Thailand. This is because the legality of short-term rentals has little impact on real-world operations, not to mention that fines have been infrequent and minimal. Now, with Airbnb and short-term rentals out of the way, what are some legal options you have? How can you rent your property legally? Okay. Now, if you're inclined to do so, you can of course manage your own rental calendar and check in and check out, but this is of course dependent on you being in Thailand and having no other hobbies. But if you don't want to handle the day-to-day yourself, there are a few options. There's the rental management program. Now, in select projects, the original developer will be appointed to manage the rentals. In such cases, the company is responsible for marketing efforts to attract rental tenants, negotiating and securing the booking, checking the client in upon arrival, and ensuring that the property is left the same condition upon checkout. Often, rental management companies will require you to be committed to the rental program for a fixed period of time, generally 1 to 2 years, and the rental funds are split between the owner and the management team, anywhere from 80-20 to the owner to 60-40. Next is the rental pool. Some rental management programs are separated into a pool Unlike the example above, where owners are rewarded on the performance of their particular property, a rental pool program groups units together and combines the revenue generated for each type to be split evenly amongst owners. Now, there are obviously some pros and cons associated with this model. The pro is you make the same money as a person who has a nicer unit than you, and the con is you make the same money as the person who has a worse unit than you. Welcome to communism. Private rentals management. When it comes to developments that do not have a rental management program, owners can contract a private management company to conduct the same services outlined earlier. Now, generally speaking, these contracts are more flexible and allow owners to still occupy the property for part of the year should they wish to do so. Then you have guaranteed rental returns. This is a marketing tool that has spread quickly to investment projects, particularly across the holiday markets. Essentially, some developers are offering a fixed percentage return on the purchase price over a period of time. For example, 10% for 3 years. During this time, the owner will be allowed 1 or 2 weeks of personal use per year, and the rest of the time the developer will have the rights to the property. Speaking of communism, let's talk about rental income tax. Everyone who owns a property in Thailand, whether living inside the country or living outside, is legally subject to pay tax on their rental income. If you live inside the country, any rental income will go towards your total personal income, which is your salary plus rental income, and you will be liable for the standard income tax calculation. Now, if you live abroad and are a non-taxpayer in Thailand, then you would fill out what's called a PND 91 personal income tax return around March of every year based on income earned from the previous year. If you live outside the country, you'll need to pay withholding tax to the government. This can be handled either by the person or the company renting out your property. This tax ranges between 10% to 15% of your rental income. Now, withholding tax may be credited back to you if you submit your annual income tax liability and make payment deductions. If you have a Thai company, it is easy to claim these payments back when you complete your year-end tax submissions. If you have a tax identification number, this will also allow you to claim back any withholding payments and ultimately reduce the payment to around 5%. Now we're going to talk about selling your property. The first thing to know is that there is no minimum holding period to keep your property, but the main difference is the taxes and fees that you pay at transfer when you sell your property. For properties that are sold within less than 5 years of ownership, what's called a special business tax is applied at a rate of 3.3% of the sale price. Now, if you were to hold the property for over 5 years, you will only pay a 0.5% stamp duty of the sales price. That's an expensive stamp. If you sell your property with the help of an agent, you'll need to pay them a commission fee anywhere between 3 to 5% plus VAT on the agreed upon property sales price once the agent successfully finds you a buyer. This is typically paid at the time of transfer when you have secured and received the full payment on your property. But in some cases, the agency will hold the buyer's deposit and will deduct any outstanding commission from this amount. When pricing your property to sell, you may want to take into consideration the seller fees and ensure you have factored in the agency fees into your advertised selling price along with the fees so that there is no miscommunication with the sales agents or buyers when seeing your property advertised online. There's the transfer fee, which is fixed at 2% of the property price. The land office will calculate this transfer fee from either the agreed upon sales price in the sales and purchase contract or the appraised price that the land office defines, whichever is the higher amount. This transfer fee can be split by both parties or paid fully by one. There is no hard and fast legal rule on this, although typically it is split 50-50 between the buyer and the seller. Withholding tax, also considered income tax, is nearly always paid by the seller and is in preparation for the property seller's income tax. This typically ranges anywhere from 5 to 35% and varies depending on the length you have held the property. The longer you have owned it, the more taxes that apply. For companies, the withholding tax is fixed at 1% of the appraised price. Now, when you register a lease, you'll also be liable to a lease registration fee of 1.1% of the contract or appraised value. As for capital gains tax, Thailand does not have a specific capital gains tax law. Instead, income derived by way of capital gains is dealt with under the income tax law, which prescribes that capital gains income is a type of assessable income subject to income tax. Now at this point, you must be totally confused because I am too. So here's an example of a 10 million baht unit. Feel free to pause this video to study this table. You also notice that the costs vary depending on the number of years you've held this property. When estimating all costs as a seller, a good ballpark is to account for up to 7% of the sale price as land office costs, not including any agency commissions or withholding tax payments. So that concludes this long and comprehensive guide to owning property in Thailand. Like I said, refer to the description for additional resources and how to start your property search. And I genuinely wish you all the best in finding your next dream home in this wonderful paradise that is Thailand. Thank you for watching, and make sure to subscribe for more content, and I will see you in the next video.